So we are up relatively large in the market over the last 2 to 3 weeks. If you've been following our content, you know that we have been long the strongest stocks in the strongest areas of the market. And here's the fruits of our labor, right? If you've been following the content, you know we're long. We're up triple digits in the majority of the trades that we're in. Microsoft, Uber, Meta, Palantir, CrowdStrike, all of these different names. And I'm going to show you over the next 5 minutes exactly how we were able to position ourselves and why we were able to position ourselves in these specific names so that you can replicate the process and make some money for yourselves. My name is Hamilton. I'm here with the Trading Initiative, and we focus on building large accounts into money-making machines, guys, using the TTI Swing Trading system. It's a system predicated on finding the strongest stocks in the strongest parts of the market and holding them for as long as the trends make sense. Most of our trade ideas are 60 to 90 days out, so it gives flexibility to professionals and business owners to be able to trade the market without being glued to their monitors all day. If this is something that resonates within you, please like and subscribe, and we will show you how to make more money trading the market. So let's start with Microsoft here. You can see that we've been able to own this thing over the last 3 weeks into this all-time high, but before this broke out into an all-time high, we had a discussion within TTI. Did we want to own Microsoft over some of the other leading names within the tech space? We chose Microsoft for one specific reason. This was the only mega cap tech stock other than Nvidia that was anywhere near its all-time high. If there's anything you could take away from this first part of the video, this first trade, it's that buying stocks at all-time highs is not a bad thing. So many market participants are afraid to own these things up near all-time highs. They want to short them, but what they don't understand is that generally trends are going to continue to trend longer than the market or you think they will. Right? These things are at all-time highs for a reason. When the entire market was drawing down from the end of July through the end of October, this thing corrected about 15%. The rest of the market fell down even more. Specifically, the large cap tech stocks got killed. Apple, Nvidia, a lot of these things recorrected. Microsoft, on the other hand, went sideways. What do we call that? We call that relative strength. And that is the third tenet within the TTI Swing Trading system. We will always look to buy stocks that are showing relative strength because if the market doesn't want to sell them, when the market swings back up, we know we want to be long. To give you guys an inside look at what we were looking at Microsoft when we entered it, we officially posted this 18 days ago inside of our community database, but we've been in this thing for about 21 to 23 days, depending on when you were able to grab it. You can see that we were looking for the 350 breakout with a stop below 330, profit target of 400, 435, etc. You had an opportunity to trade call debit spreads at under $1 at 95 for a max profit of 405, so that's a 4-to-1 setup. You could grab shares, or you can do what some of the guys inside of TTI did and grab straight calls to give yourself uncapped potential into an all-time high breakout. As you can see, we have a couple traders in here that are long just straight calls. This is a March 15th 390 call up 104%. This was last week, so this thing's got to be up near 130 to 150% today into the all-time high push. We have other people that are inside Microsoft as well. We have another 395 call for that March 15th. This was up 93%. This is up and over 100% as of today. Obviously, this was late last week that they were posting these. The idea, though, is that if you're buying an all-time high breakout, if the IV is not against you, right? If IV is not above 50, IV rank's not above 50, and the calls are within your max position sizing, buy the calls because you're going to benefit from two different things. You're going to be able to profit off of the actual push, the directional push that you're buying, right? If you're buying calls, you want this thing to go long, but also you're going to be able to take advantage of IV expansion. Below 50 IV, below 50 IVR, there's a good chance that this thing is going to expand. The IV is going to expand on a breakout. That's exactly what's happening with Microsoft. So the guys that were able to buy calls inside of TTI are now getting profitability off of both the directional play and the IV expansion. So congratulations to the guys inside of TTI that grabbed this. And if there's one thing you can take away from this specific setup, right, this Microsoft play, don't short all-time highs. They're up there for a reason. Join the trend. The next trade I want to talk through is Uber. We opened this thing up about 2 weeks ago, officially posted it 11 days ago. You can see risk on above $50, risk off below 47, profit targets at 60, and the next one's at all-time highs. We're taking either the March 15th $60 calls for about $1.50 to $1.60, or the shares. Shares are a great opportunity at Uber as well, considering its high ADR at 3.52. In this case, we updated it with a video, not an actual write-up. And as you can see, Uber is absolutely ripped. Now, this came out in a newsletter, right? We wrote a newsletter about this. We said above 49, above 50, you're probably going to want to look at Uber. If we cut this stock in half, which is what we did off of its IPO price back in 2019, you got to be bullish above the midway point. Every time Uber is trading above the middle line of this chart, We are more so in a bullish uptrend than not. Why would you want to short this thing into a seasonally strong period after it's already broken to the upside, routing the 200-day moving average? RSI is screaming at you. The market wants it. This was a fantastic opportunity to get long yet another tech name into new 2-year highs, Uber. And we have a price target here near all-time high, $60, and post $60. Who knows where this thing can go? So this is another example of one of those names where as long as it makes sense to be in a straight call via position sizing, as long as it's not too expensive for your account, it would behoove you to be in calls and not call debit spreads, because with the low enough IV and an all-time high implication, you don't want to cap that potential profitability if you don't have to. Straight call here was cheap enough with low enough IV that was the way to go. And as you can see, as of last week, Uber was already up and over 125% for the majority of people inside of TTI. Everybody that grabbed an options play on this is up and over 100% today. This is not taking into account the last 5 to 6 trading sessions, and we're at new highs, new 2-year highs in Uber. So this thing is probably up closer to 175 to 200% right now. And as always, we want to close half of the position at 100% or a little bit more to take the risk out of the trade. So if there's one thing I can tell you about this specific setup, it's that if you find these recent IPOs and you can cut the chart in half and look at the uptrends, cut the chart in half. Above it, it's probably more bullish than bearish. Below it, it's probably more bearish than bullish. If you're in an uptrend and on the upper side of this cut in half chart, buy the long breakout, as long as the market is also telling you that you should be long. These are great setups, especially because we're pressing in towards all-time highs. Like I said, if you bought the options contract, theoretically, your profitability is infinite. The last trade I want to talk through really quick is Meta. We posted this about 18 days ago, but we've been in this for anywhere between 18 to 21 days. Yet another mega cap. If you haven't seen, we're talking large cap and mega caps. This is what we want to focus on right now. This is what the market has been telling us to buy all year. So why would we not go out and buy that? We see it's a communications name, which is different. The other two names were tech. This is communication. Large cap at 797 billion. We wanted to own this thing above 305 with a risk off or a stop at around 285, a profit target of 380, and then yet another one above. We could grab either call debit spreads for, once again, under $1 for a max profit of 415, so a little bit greater than a 4-to-1 setup, shares or straight calls, depending on whether or not your account's large enough to be able to buy straight calls. And here we are, Meta. Up, we grabbed somewhere around 305, 304. A bunch of us were able to grab this thing. This thing's up about 10 to 11% right now, and we're up and over 325 into new highs. This is new 2-year highs in Meta. This is the main communications name that has absolutely been screaming. This is a third trade we've taken this year in Meta. All 3 of them are now a success. I'm super stoked with how we've been able to play it this year. Look at that beautiful 200-day moving average, just absolutely ripping, sloping up, just telling us that the market does not want to sell this thing. The entire market was correcting around the peak of July, which once again Meta was as well, but instead, just like Microsoft, instead of the market selling Meta off, it instead went sideways. What is this? Relative strength. It's the same concept as Microsoft. When you're looking through stocks to own, specifically within certain market caps, we knew we wanted to own large caps and mega caps because that's what's been working all year. Why not go and own the mega caps and large caps that didn't correct with the rest of the market as steeply as some of the other stocks? Go buy those. Those are not correcting for a reason. The market doesn't want to sell those off. It's not up to you to decide why. It's just up to you to make the actual play at logical levels and take advantage of the uptrends that the markets are going to give you. You can see Mike here posted earlier today. He's up 105%. Most of the guys are probably up somewhere between 80 to 110%, as well as Meta's pushing into a 2-year high. For some reason, he's also up over 1,000% in Palantir. I'm not even going to ask why. We have another member up only 63% in this Meta play, but the rules apply here. We want to own the mega caps that are breaking into new highs. That's what has been working all year. So if there's one thing you can take away from this specific setup, we had one thing to take away from Microsoft, one thing to take away from Uber, Meta. It's that if people want to go and buy the riskier parts of the market, the smalls and the mid caps, totally fine. But if the Magnificent Seven, if the mega caps and the large caps are the only stocks that are working all year, supposedly, which is not true, but supposedly, go and buy them. Instead of bitching about breadth, quit being a bitch and buy the Magnificent Seven. Buy at logical spots, take advantage of the uptrends, and make some money. Specifically, you guys with larger accounts, there's no reason why you can't own Meta and profit over 100% on a mega cap like Meta. One more, really briefly, I wasn't going to go through this, but it's such a great setup I wanted to show you. Earlier today, we posted this inside of TTI ARM Holdings. ARM, recent semiconductor large cap IPO. It's a spinoff of NVIDIA. You could check the risk levels here. We wanted to own it above 56.5, which we got today. A risk off below 53.5 with profit targets at 63.70 and potentially all-time highs. At the time, the January 19th 62.5 calls were what we were going for, anywhere between $1 and $1.20, depending on what you got filled at. And as you can see, we already have guys in the trade arm. It's already up 100% over 2 sessions, right? So Brian and Mike were able to grab this thing at the end of last week. These things are up already over 100%, so it's a very easy flip. Closing half, letting the other half continue to ride. There's no reason to close these things early, specifically if you have a huge profit cushion like this, but we want to take risk out of the market. So let's close half, let the other half continue to ride. And here's the setup, right? We wanted to own it above 56.5. It's currently trading 59. What makes ARM so specifically unique? Why is it up this much? Because it's a sympathy play off of NVIDIA. If you went and looked at the actual NVIDIA play, we're breaking $500 today for the first time. This is an all-time high in NVIDIA with anticipation of earnings tomorrow. Fantastic. The problem was, to get long NVIDIA, the cheapest play that made sense to us within our time frame was over $800 per play. And I'm sorry, but does it make sense to own NVIDIA at $800 per play, or this stock, which will run off of sympathy because it is an NVIDIA spinoff at $1? This is 1/8 the cost for the exact same price action. This is what makes TTI a better trading community than 99.9% of other trading communities. We take into consideration small nuances like this because we actually trade. We're not just marketers. We're not going to drop $800+ per contract when we can buy something with arguably the exact same price action for 1/8 the price. There you go, 100% in one friggin' day. We're able to flip this thing for free now, and we have the next 60 days to hold this thing for, who knows how far this is going to go. If NVIDIA does absolutely blow earnings out of the water, there's an opportunity for ARM to absolutely hit all-time highs, and this is going to be a triple, well, it already is a triple-digit winner. It could be, four digits. Could be 1,000% plus winner if all thing goes perfectly. I don't know if it will, but now we're in the driver's seat where we have the opportunity. We have zero risk capital in the market with this specific setup. Learn from this. If there's one thing you could take away from ARM, it's find sympathy plays. Make sure the chain is accommodative if you're an options trader. Shares are obviously a different story. You can buy shares here as well, but take something away from this specific setup. You don't have to go and spend $800 on a contract if you can find something at 1/8 the cost. So let's just summarize this really quick. We went through 4 specific stocks, right? We went through Microsoft, we went through Uber, we went through Meta, and we went through ARM. If there's something you can take away from each of those, please write it down and implement it into your strategy. Microsoft, buy the best stocks at all-time highs. Fuck what everybody says. They're at all-time highs for a reason, right? Uber, if it's a recent IPO, cut the chart in half. The 50% above, if you're in an uptrend, buy that. There's a reason why it's up there. Generally speaking, these specific stocks are not priced incorrectly, and if the market likes it above that 50%, there's probably a good indication that it's going to continue towards potentially all-time highs. Meta, if you find a stock that is going sideways when the broader market is going down, that's called relative strength, buy that stock at logical levels as it breaks out. There's a reason why the market doesn't want to sell it off. And number 4, ARM, which is our instant flip here, 100% in a single day. Find cheaper opportunities in the market that will run off of sympathy. You don't need to go and spend $800 to $1,000 per contract on something, greatly reduce your risk, and still take in the same type of price action. This is called smart trading. All right, guys, smart trading. My name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, if you learned something, if you have a large account, you want to learn how to make some money, swing trading, looking 60 to 90 days out, I highly implore you to like, subscribe, leave a comment below, and you know what? I'll catch you in the next video.